The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at the grain and livestock market trade as well as the outside markets on Valentine's Day Tuesday, we saw a fairly mixed, choppy day across the board. We gave up some of the early gains in grains, finished slightly lower. Livestock trade, cattle down a little bit, hogs a little bit higher. Outside markets reacting to more inflation data. Here to walk through the market trade with us today, Jacob Burks with agmarket.net is here. Jacob, good to catch up with you, buddy. It was fun to see you and the crew last week in Nashville for your conference, and glad to see you made it back in one piece to the office, Jacob.
I did make it back. That Nashville is a very easy place to have fun. That is a very fun place, and yeah, what an awesome opportunity. And I appreciate you coming over there and sharing the time with us as well.
Yeah, it was a lot of fun, a lot of great insight, and I know plenty of farmers and ranchers in attendance got a lot of great insight from the conference as well. Well, Jacob, let's dive into these markets and, really looking at things when the dust settled on Valentine's Day Tuesday. It's kind of quiet, kind of mixed. We lost a little bit in soybeans and in the wheat markets too. Corn just kind of hovered around unchanged. Really just felt like when everything was said and done, not much of the way of damage done to the markets, just a very quiet day on Tuesday.
It was very quiet. I mean, it was, a little bit of a turnaround Tuesday, you could say. Kind of how fitting it is that on Valentine's Day, most of the screen's red here. So, a couple cents lower front months. We did see a little bit of bear spreading in the corn market. Went back and tested the $6 level in the new crop corn market. And it was no wide ranges, no sporadic trades today. Just kind of slow and steady. A lot of news, dissecting a lot of different news across all the grain. Whether you're talking about the Ukraine war situation, whether you're talking about China's ideas of importing U.S. grain, whether you're talking about Mexico's new situation with what they're wanting to import as well. So when you look at the beans down 5 cents, still at the top side of the range after a strong move yesterday. Wheat market down 5 or 6 with rain events, forecasted to come across most of the Midwest. I would have to say that the grain market's held in there really strong today. Soybean meal traded below $500 in the March contract, but closed above it. But to give back a little bit in this type of market, not much of a day here.
Well, you hit on a few different news items that are all impacting one grain or the other. And, with that soy complex, I think let's start there. South America weather has been the highlight. Sounds like new reports are that Brazil's close to a quarter of the way harvested with soybeans, with Mato Grosso approaching 50% harvested. Brazil's soy basis is leaking a little bit, and for March, they're now more than a dollar per bushel discount to the U.S. soybeans. So I look at this soy complex. I know there's been a little bit of concern here with those Brazil supplies coming online and demand shifting to Brazil from the U.S. As you look at that situation in South American weather, are you concerned at all in this soybean complex right now, Jacob?
Actually, I've been somewhat pleased with the pace of our exports as of the last 3 weeks. We've actually shipped out more. This time of year is that shift mode, right? And from the last 3-year average, we've actually increased our exports shipments anyway last 3 weeks compared to what we were expecting. So that mode, the delayed harvest in Brazil due to the rain events that have come along. That actually has been pretty pleasing as far as I see it. You got to look at the size and the amount that you're going to be seeing coming through Brazil. And with the trucker strikes that it's inevitable. They haven't started yet with the road systems that they had and the logistics that they have down there. There's going to be a lot of delays. You've seen that harvest pushed back enough to where I think some of those concerns came a couple of weeks ago to where China and others were looking for us to have that consistent shipment. So I'd have to say from our export program, yeah, pleasing on the bean side anyway.
Well, this meal market too has been a talking point, especially with Argentina's drought concerns. Can they get some beans down river from Brazil to help with the crush plants there? Meantime, we're seeing crush plants prices here, Illinois, Iowa, along the river, really strong on the board. We're over $500 a ton, 501 at the close on Tuesday. This meal market's been just on fire, Jacob. I know we've talked about this too, just how impressive this meal market has held together.
Yeah, it's been, and some of the things that we kind of noticed here in this meal market as well is the difference between some of these front month back month spreads. You look at if we're going to end up running out of soybean meal, it could be in that late August time frame. So that being down almost $50 below the front month, that's a spread to watch there, and that's something that we could see if we see a breakout. It could be out there in some of those deferred months. But that mill, we're looking at what Argentina has seen and what Argentina's had happen, this last couple of weeks. Still haven't gotten a whole lot of relief in some of the more important growing areas of Argentina. And even this weekend, you're seeing forecasts that yes, in the next 10 days we're going to see some better temperatures. Some warmer, excuse me, some cooler temperatures coming along. But missing some of those rains in that areas, it's just they haven't gotten that relief, and it's still continuing to struggle. And you're seeing private estimates of down around 34 million metric ton as opposed to where the USDA's got them in at 41. So those numbers could continue to come down in USDA.
Jacob, let's move a little bit farther north, but stay south of the border and talk about Mexico. The corn decree coming out on Monday afternoon, basically saying that they are going to allow corn imports for livestock and industrial use, still banning it for human consumption for food, and then banning glyphosate as well. So a little bit of a softening of the stance from the Mexican government, but the way it's sounding, U.S. folks, ag groups, NCGA coming out with a statement basically saying, hey, this still isn't completely right. They want to see more science behind the decision. I wondered how that would affect the corn market on Tuesday, but largely didn't really do anything to the corn market, Jacob.
Yeah, it almost felt like you're throwing things out there like China might every now and then to try to decrease the price so they could buy more. That's what it felt like at first. But I think they decreased their stance, but yet they sped up the time frame too of what they are not taking. I think that you'll have decrees. I think you'll have an administration, hopefully, that will continue to fight this and continue. This is a serious shakeup to our trade. It includes a lot of different avenues, but I see that this market held in. When I say it didn't go only down 2 or 3 cents, I think that's one of the big things that it didn't take that news. It digested it, but I think it's didn't affect the corn market the way that some thought it would this morning. I think that's shows the strength that we have here right now.
Well, and you mentioned some of that spread activity in the corn market. I look at new crop getting up around that $6 level again. Old crop, March, that 690 level, the overhead resistance is just that area we can't seem to bust through right now, Jacob.
No, this is something that definitely needs some type of more bullish news to help it push through. And I think it's going to probably end up waiting and seeing. Exports, yes, could affect this if we get some strong export movement here, and we just haven't seen sales. Thursday's sales number will be pretty a one to watch, but this is going to take some acreage numbers probably to start coming out. I think we come into February, you're looking at the forum, the ag forum that we'll see. Maybe that right now it's around 91. I think is what they use for baseline. If that could come down to in that 90 or area or somewhere in there to help boost that might be the bullish news that we could get to push this forward. But right now these guys got to be pretty happy with the insurance prices staying up around that $6 level. This is good for that February month to stay at these higher areas of the range anyway.
Well, and the other area too that you mentioned earlier with the wheat market, putting a little bit of risk premium back in with the Russia-Ukraine war, and seeing a little bit of a pullback on Tuesday, but nothing too serious there. I think this Russia-Ukraine situation really seems to be coming back onto traders' minds here as we get into the month of February.
Yeah, it comes into your minds whenever you see more major advancement coming from Russia, and you're already expecting 30 to 40% more less corn put in the ground over there, and that is a significant part of of global trade, and I think that's something that we continue to watch and continue to talk about, but really don't know the effects sometimes of how it's going to happen, because even if we do get it harvested, the bottlenecks that we're seeing to actually get it out of the country whether it's their power grid or whether it's their just simple logistics interior of Ukraine, is something significant. But then when they get it out in the boat and whatever the maritime laws are and the maritime rules and regulations are, that we're just continuing to slow that down and not getting them pushed through. That does inevitably push people towards wanting to buy corn and buy grain from an area that has a consistent departure. So it really helps us out in the long run. But man, it's something that is something that we have to continue to watch, and that news can change on a dime, just like those missiles coming over last weekend.
We are talking with Jacob Burks of agmarket.net here on today's Market Talk. Jacob, I know we had inflation data out on Tuesday morning. The consumer price index rose 0.5% month on month in January. That was slightly higher than analyst expectations. Headline number, inflation 6.4% year on year. That was above analyst expectations as well of 6.2%. It took a little while for the outside markets, it seemed like, to digest those numbers. Overall, though, it seems like we just kind of digested it and moved forward. Was that kind of the feeling you got from the inflation data and how it affected things?
Yeah, absolutely. I mean, you see the stock market push down for a while here. Went a couple hundred points lower. We've actually traded on both sides of the day. Both sides have unchanged on the day, the year after that news came out. I think the fear right now is the fact that it was a little bit more than what we saw, and we'll see rate hikes probably again in March, probably again in May. And that is something that from a commodity standpoint, you have to feel that pressure and see that these outside markets, if we continue to see a little bit of bearishness through the stock market. We're always talking a lot about the demand side of the picture whenever we're looking at the cattle and looking at some of these products, and I think the Markets Digest, I don't think that it was unexpected. So yeah, I think it was just kind of a ho hum day there, even in the outside markets with that big data number coming out.
Yeah, ho hum day. We'll see if there's any spillover effect later this week and affecting the money flow into commodities, into grains, and into livestock too. Let's shift over to livestock. Hogs, really good day in the hog market Tuesday. Front month February, staying close to that cash index as it expired, went off the board. But, I look at this hog market, it's taken a beating. Cutout values, though, getting a little bit of support, maybe a good sign of demand here. I wonder if that's giving us some underlying strength here in this hog market right now.
Yeah, I think some of the things that you can look at for some underlying strength, one is seeing that China's hog market did have a little bit of pushback here this last week or 2 weeks, that we've seen a little bit of growth there. We've seen such a large amount of hog numbers for us to see that demand finally catch back up. I mean, they're filling freezers, whatever we're looking at, preparing for some spring weather. You do have a positive tone to the market in the last 4 or 5 days, which is significant. We see a little bit of a rounded shaped bottom, but you get that June contract trading back above that 104 level. You got the one thing that is kind of scary, something to watch here, is looking at this April hog market that is, what are we now, $12 above the cutout. So that's something that we'll watch to see which one comes together. We do need to see those cutouts continuing to rally, or that number will have to start heading the other direction.
I was going to say, you brought up what I was going to bring up as well for a point there. That April contract and the cash index, that's going to be fun to watch here. Maybe not fun, depending on which way it goes the next week or two, just to see how that converges together. We know it will converge. It's just what way are we going to go? And I think that's going to be very interesting to keep an eye on. Cattle market. Oh, sorry. Go ahead.
Even if you are a cattle feeder, you hope that market continues to come. I mean, the last time we saw these prices this high back in 2014, we didn't see the hog market, this high. So you didn't have as many hogs out there to produce. So that supplementary product there that we're looking at with these hogs, to see them continue to rally, see some deduction, see some demand there. As a cattle feeder, you hope that that price continues to keep that upward trend too.
Definitely. Well, speaking of this cattle market, I know Monday we set some new contract highs in the live cattle trade. We had a robust day in both live and feeder cattle. Gave a little bit of that back on Tuesday. It just felt like maybe the market took just a bit of a pause, some slight profit taking, but nothing really major as far as moving lower on Tuesday's cattle trade.
No, cattle, I mean, you got to remember, you got to bend your knees to jump, right? So hopefully this is just a little bit of slight pullback here. We did stay on most of the top side of these moving averages that we've seen in support. The trend line has definitely been strong from a technical perspective in all these cattle markets. I mean, you can get into the, about every contract, you got some type of moving average that we follow pretty significantly. The cash market, will be the leader in this cattle market. We've seen some kills get a little bit lighter. These packers are having to go out into the cash market and buy some cattle to fill these voids that they have, and that's very positive for the cattle producer anyway. Box beef has continued to rally. You're starting to see tightening of the between the choice and select cutout, and imports will continue to grow. And that's something that we'll have to have as in our back pocket there, that'll be capping some of this, but inevitably the bullish sentiments to these cattle numbers are really starting to show up, and it's being led in the cash market. And I think I didn't see any cash movement today. I didn't look at it, but we've seen some very strong movements, especially in the South, and being led in the South with a higher cash market is very significant for us and as cattle producers.
Well, and to your point on that cash market, it's been interesting to watch the last couple of weeks, this standoff between packers, feedlots. I mean, it's, taking us till sometimes late Thursday, if not late Friday, to get any cash activity going here. And I know last week we saw northern trade $4 higher. In the South, we've seen a buck or two higher. And this has been quite the cash trade to watch here the last couple of weeks, just this standoff we're seeing in feedlot country, Jacob.
Yeah, I mean, as the kills are getting smaller and they're running out of these contracted cattle or these formula cattle, I mean, they have to come to the open market, and that's where the fireworks can happen. I think that's something in the next month or so that could be very interesting to watch, and that's the explosion that we could have to move this thing significantly higher. I mean, you've heard a lot of analysts talk about opportunities in these cattle markets to see. I don't want to throw numbers out there, but I've heard significantly higher, and I think that's going to be what happens as we get tight. Demand hopefully stays strong. That's the red flag there that could be. When you see that CPI data come up, that's the first thing I thought of. I look for the cattle, see what's going to go on over there, and if demand can stay strong through this, we continue to see box beef, small loads and box beef going out, small accountability there with that cash market. But right now we're looking at the cash leading the way, and that's going to be very healthy for this market.
Well, Jacob, before we wrap it up here today, run out of time, I'll leave the floor to you. Any risk management thoughts you have across any of the grains, livestock, just anything you would want producers to maybe think about and remember here as we work through the middle of the month?
I was starting with live cattle because that's what we just got done talking about, and this is where I become passionate about what is out there. And we just talked about cash market can be extremely strong. We could see some imports come by. We could see this CPI data, create a stock market starting to pull back a little bit, and that's where more so anything the money flow and looking at what could happen with this. We haven't seen the CLT report in 2 weeks now, since the 24th, I think. So that's something that if we start to see the funds pull back out of this for any type of reason, whether they're just pulling money out of here, they think we're too high, any sort of thing could happen. We do encourage guys to go out here and look at laying some profitability puts underneath there. When you got the opportunity to put some puts in place that are above your break even, that's just a good risk management strategy. On the grain side of things, I look at the corn market and the bean market as well, going through this February time period for your risk management of your crop insurance. Great, I hope you all have it, but don't forget to market the grain as well. And we look at what's available to us out there all the way out into like a May option strategy. So you can use some short dated new crop May options. That'll get you past the planting intentions report. And this planting intentions report will be significant. We talked about acres a lot with the just the two 180 million acres that we need between corn and beans. And I think that your May option does a good job to get you through a lot of that information. We'll know a lot of information about what's going in the ground whenever it gets to the end of April. So that's what I would encourage. We can go through numbers and do all that kind of stuff. But main thing is like time frame. When do you need that? When are you going to be making sales and laying those options out there in a time frame that makes sense for you and your operation?
Well, Jacob, as farmers are checking those break evens and looking at things that make sense for their operation, I know if they have questions and want to go through the options and the tools they have in the toolbox in front of them, they can talk to you or any of the folks there at agmarket.net. What's the best way to get a hold of you guys?
Hey, first of all, just look us up, agmarket.net. We have a 30-day free trial of our intel that we send out on a daily, weekly basis. From that website, you can also go to our team page there and look up any of us individually. we'd love to chat with you, and we get pretty passionate about risk management. So that's one of our things that we would encourage you to do here today.
Well, we appreciate the time, and thanks for joining us here on the show today. Jacob Burks of agmarket.net. Take care. We'll talk to you again real soon.
Hey, thanks for having me, Jesse. Appreciate it.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.